Welcome to today's episode of Scouting for Growth. Today's guest is Ola Jacob, Business Development Director for the UK and Ireland at Descartes Underwriting, a specialist parametric insurance MGA and insurer. With over 12 years of experience in the London market insurance sector, Ola has worked in UK retail, product recall, tourism, onshore energy, and parametric insurance. As one of the pioneers of parametric insurance, Ola helped build a distribution strategy for one of the first successful parametric solutions provider in the London market. In 2024, he was named Insurance Time Technology Champion of the Year for his innovative work. Prior to joining Descartes Underwriting, Ola spent 4 years at Flood Flash, where he played a key role in establishing parametric insurance as a new category for commercial insurance. On today's episode, Ola will provide an educational deep dive into the world of parametric insurance. He will explain what parametric insurance is, how it differs from traditional insurance, and why it is gaining traction as a data-driven solution to cover risks like natural catastrophes. But we are going to talk about Uber and LVMH too. Ola will share real-world example on how parametric insurance has provided significant value to corporate clients and industries adopting this innovative approach as part of their risk management strategies. With his extensive industry experience and passion for leveraging technology to transform how the insurance industry covers risk, Ola is the ideal guest to demystify parametric insurance. So stay tuned for an insightful discussion that will broaden your understanding of this cutting-edge insurance market segment, because parametrics is actually targeted to corporate clients, to business clients. So as I said, we are going to talk about a lot of different cases which are not insurance focused. So let's welcome Ola Jacob to Scouting for Growth. Hi Ola, thank you so much for joining me on Scouting for Growth today.
Thank you for having me. It's a pleasure to join the InsurTech Queen.
Very nice. Thank you. I feel quite, it's not shame, but, I love when people say, don't take me wrong, but it's not a title I'm using much, simply because I want to drive value in this industry and I want it to be based on my merit. So thank you for highlighting. Yes, I'm recognized as the InsurTech Queen, but, it's not something I do use very often anymore. So let's start with talking about you, Ola. I would love for our listeners to get to know you a little bit better. And so my first question to you is, can you tell us about your background and what inspired you to specialize within the parametric space in insurance?
I'd love to. I don't want to give like the boring version of the story. I'm sort of trying to figure out like, what do I do to prepare today? And I didn't know if I should listen to Joe Rogan or do some parametric research, but here we are. But I guess when I started insurance, I didn't know much about it. But when you strip it down to its bare bones, it's the idea of, making good on your promise. So that for me was a big draw, because it almost felt like altruistic in a sense. Like when it's done right, the best claims, when someone receives their check and everything's gone smoothly, it's probably the best feeling in the world. It's the stigma around it that we get from the bad experiences. That damages the image of insurance. So normally if I speak to people I've never heard of or never heard of insurance, I sort of explain what I do without mentioning the word insurance. And then some people say, do you work for a charity? So that's like part of it. But then in my like 13 years in insurance, and I guess I always wanted to see how we could make that promise better, given the stigma that it has, so that I didn't have to say, not mention the word insurance and people would still think I'm doing a good thing in the world. And then that's when I came across Parametric, and it just seemed like if you add that to indemnity, this could really be a game changing idea that could change the face of the way we do insurance forever.
Yeah, it's interesting because a lot of us fall into insurance. I fell into insurance, I guess, 25, 26 years now. And the reason why I came into insurance was because of the relationship and the way the market operate with one another. Because it is about mutuality, but you cannot succeed in insurance without building the relationships. So it's interesting, right? At the same time, there's a stigma because of claims. A lot of people don't get their claims paid. But then now with technology, we can do much better in the world and have a better view of what a risk looks like and actually communicate with the customer transparently to actually help them understand what their risk profile is if we do it well, right, Ola?
I agree. And I think when you say that, it makes you think of like the whole reason why I kind of got into insurance is I had my background was slightly different because I did computer science.
Yeah.
And I guess the whole course that I loved, I do love technology, and a bit about the course that I loved the most was human computer psychology. And basically, the best solutions are solutions that people don't know about, solutions that don't get in the way and just make things better.
Yeah.
So everything you're saying is kind of music to my ears because if you're going to create a solution that helps, it's not something that should be like another login or another portal, something that's clunky that just gets in people's way. It should be, you know, almost cool and slick, like a Rolex that goes on your wrist, or
Yeah. Or your mobile phone, right? Just
yeah,
yeah, using the experience around you interacting. Interestingly enough, most people interact with their social media every day from their mobile phone. So how can you make insurance in that way? And it doesn't need to be from a corporate portal. I would say it could be through a really interesting engagement distribution channel. Think about maybe some of the digital wallets are going out in the market as well to actually start improving those type of experiences for the users and hopefully as well for the insurance companies. So the question I have for you is, I was reading that you were recently named Insurance Times Technology Champion of the Year. What do you think has been the key for you to get this award within our industry?
it was a beautiful award to win, given that I've always wanted to come in and do something that helped change insurance for better with technology, because that was my background. But I think I honestly owe a lot of that success to the people that I've met on my journey, that have been open to change, the game changing ideas, the people that put things into practice, the people that challenge ideas, like yourself, like others on my journey. And without that, nothing will change, especially in insurance, where it's a people business. A lot of people are stuck in their ways. So if you haven't got like, innovation can't be done on your own. So as much as I'd like to say, thank you for this award, but I believe that it's more a reflection of the whole industry and all the people that I've met on my journey that have been open to change. And I, I guess the other thing to add is that I don't think we've done it yet. So I almost feel like it's like we're premature on the way there, and there's so much more change to be had. So it'll be great to see how we can push further change.
Yeah, absolutely. So let's go into some definition around parametric insurance, because we can't assume everyone understand what it is. And I realized that when we were on this, panel discussion at InsurTech Insights Europe earlier this year. And so for our listeners, understanding. So what is parametric insurance and how does it differ from traditional insurance products we see out there?
Okay, I can definitely do that. So parametric insurance, probably the biggest problem with parametric insurance is the name, because it just sounds so complicated, but it's actually the simplest form of insurance that there is. And I hope that, after, in fact, I don't hope, I'm sure as soon as I explain this, you are going to start telling me some ideas for different parametric products, and because that's how easy it is. So the mantra behind all parametric policies is when a pre-agreed parameter is met, then a pre-agreed payout is made. So this will form the backbone of all parametric contracts. And how that differs from indemnity is indemnity is a promise to put you back in the same position that you were before the loss. And there's a lot of conditions, and there's quite a few contract conditions and acronyms that you might have to understand. But with parametric, it's pretty much black and white.
So black and white. So we said, okay, what type of products could we think about right now with sustainability, climate change is probably a key area where parameters are being applied, particularly, I think, in Africa. I remember discovering parametric insurance and products probably 10 years ago with M-Pesa and Vodafone, who in Africa, young people, farmers, everybody has either feature phone or a smartphone nowadays. And with that phone, they pay everything through the smartphone, right? Actually, most people don't realize that telecoms company are banks in some ways, and payment mechanism in many markets, partly underdeveloped markets as well, and growth markets as well. And when you start looking at the parametric product, the farmer, for instance, could actually buy the insurance product as part of their farming activity by insuring their seeds, for instance. And if a parameter was met, which was climate, changes weather, it rains too much, it's too dry, then you could actually activate the parameters without having any claims activity taking place technically. So thinking about new products, would love to talk about new products, actually, Ola. Climate is a big area, but actually talking to Jan, for example, from Autonomy, we can apply this in supply chain. And remember, Deepali from UNICEF talked to us about how we do this as well for underserved market segment. What else can we do with parametrics?
Sure. I'm gonna like bring the mantra back in so that we can, understand the concept just one more time. But I guess so the pre-agreed condition could be wind speed, for example, and the wind speed could be above 60 miles per hour, because that's the threshold. And then the pre-agreed payout could be $2 million. So as soon as the wind speed at that location goes above 60 miles per hour, then you get $2 million. So that is when we say pre-agreed condition and pre-agreed payout, that is what it is. So then in terms of products, I was thinking about this on my way back yesterday because I knew we were gonna have this conversation. And then I was in an Uber and I thought, let me think of a cool idea that is completely separate to like what I might be normally talking about. But I realized that, sometimes people book an Uber more if it rains. And that might mean there's a link between demand and the weather with Ubers. So if Uber can provide us the data, and I did actually add the person on LinkedIn that handles their insurance this morning, just in case. But if they have the data on how weather affects their demand, then we can create a product that sits in and around Uber's demand and could give the drivers income protection. So it means they encourage more drivers. So it stimulates their business growth through an insurance product. So that's like a random one that I thought I'd give you.
Yeah, I mean, this one is an interesting one because I do speak a lot to Uber drivers, and there's this yield often happening on Ubers, either because people are asking for Ubers at the same time. Weather is definitely a trigger. Train strike is another trigger to actually find your Uber being twice as expensive that it is usually in central London. And so that would be a trigger, right? Which would actually activate the insurance. Could we implement actually parametrics within the Uber sphere, do you think, Ola?
I'm so glad you said we could do it for weather, 100%. I'm so glad you mentioned the train strikes. So parametric products, the parameter has to be measurable and independent and something that isn't, controllable by somebody else. So unfortunately, strikes are something that, people can just call whenever they like. So that means you can imagine having a policy where, I can just decide I'm going to strike and then it pays out. So that would be a difficult policy to create via parametric. But if it's an independent measure like weather, nobody can control the weather. I mean, not that I know yet, unless you're a superhero. So that is something that's completely independent. We use independent data sources, and then you can trigger it based on that. So it's not data that we're creating internally on our side. It's not data that the client's creating. It's data that we're both looking at independently. That gives us a fair measure of what's happening.
So what about cybersecurity? And I'm thinking as you were talking, we talk about climate. I would like to know about cyber. I would like to know about terrorism, if I may. Can those be, products? Can we design products for those stuff?
So there are a few cyber products out there, and there's parts of the cyber ecosystem that can be protected with parametric. That's for sure. And there's so many different ones. There's server downtime, there's breach protection. So I won't go into that in too much detail, but there's a lot out there. But with terrorism, that one's very interesting because you probably could create a parametric product out of terrorism, but again, the problem with this product being created right now is that globally is that the definition of what a terrorism event is varies from government to government. So it'll be difficult to have. The whole point about parametric is that it pays out quickly. So as soon as there's a dispute about whether something's terrorism or not, it means that we're not able to pay out because we're not sure whether it's this or that. So it kind of like takes away from the principle of that fast payment. And then I said in the beginning, black and white, that would be black, white, gray, orange, yellow, I don't know, kaleidoscope.
Yeah, definitely gray sounds like. So what are the benefits of parametric insurance products out there? And I'm sure, there is a plethora of parametric softwares. We mentioned quite a few, right? Which have to be designed based on triggers we cannot control, but because the trigger appends, we can actually link a parameter to a behavior, to an action. And so for you, what are the benefits? How do we speed payout, I guess, as well? And how do we define coverages for things which are hard to insure, right? Because we are seeing so many emerging risks coming to market. I'm just thinking, when I think about emerging risk, actually, Ola, I'm thinking about emerging technology, as the InsurTech queen, I'm always thinking about technology. What about generative AI and AI? Tell us.
So yeah, so some of the first policies that ever sold, they were like five or so years ago for flood. And it was a great opportunity to see the claims process in action. Because before this, it was all an idea, it was all a concept that I thought was amazing. But the proof's in the pudding when you actually have a claim. So then that immediate payment, what we found is that a lot of the clients that we were selling to in the beginning stage didn't have any other option for cover. So this was their only option. And they couldn't always buy the same limit that they had previously. But then what we found is that they could recover with 10 times less the limit than they had previously because of the speed of payout. And there's two key reasons for that. One is that not just because the payment's fast, but they've already pre-planned how they're going to use that payout because they knew what they were going to get if this event happened. So they knew exactly what they'd get. So they already know how they're going to use the cash. They've got all the procedures in place. So it meant that the business back up and running, doing what it does best a lot quicker. And then if you think about that for like any weather affected policy in the world, if you were an indemnity insurer that was covering them for a natural catastrophe, but they were quite heavily exposed, if the first part of that loss was covered by parametric, it means that you've got a layer of protection that lessens the effect of the loss because you're reducing the quantum of the loss because it gets dealt with quicker, and that you have a lower chance of being hit on your excess layer above that. So it becomes like a very effective deductible infill that gives the client better cover, but then they have the layer above that with indemnity that shouldn't get hit. It should work better than a deductible infill in a traditional sense.
It's interesting because as you were talking, Ola, I'm thinking COVID-19, 2020, a lot of businesses went out of business since. And imagine if they had a parametric products covering them. So many would actually probably be still in business when you think about what you just said right now.
Exactly that. And I'll even go as far as say that even though business weren't covered, that payment that they got from the government in the UK, because I'm not sure what happened in other parts of the world, it it was unspecified how they'd use that money to recover as a business. So you found cafes that were becoming supermarkets. You had it was like it was quite interesting to see how people chose to recover. You had businesses becoming open up delivery elements to their business off the back of, so it meant that they had the flexibility to be creative and do what they
Yeah.
do best, because they
Yeah.
are businesses, they're the ideas, and we took away that level of risk that you can do that with Parametric.
Yes, I remember, a lot of restaurants around my area, we were not able to go to restaurants anymore, became, delivery offices, but also taught you how to do a pizza. So, started doing a little bit of video, and then you could go and get your little bits delivered and do your pizza at home. So you had to be so creative during that times. And I guess that money allow you to speed up your recovery, speed up your creativity, and probably look at new business models. So my next question to you is, how can parametric insurance help close the protection gap? Because we hear a lot about the protection gap. Swiss Re has highlighted that it was around a 1.8 trillion, not billion, but trillion dollar, market or coverage problem right now because of risk like natural catastrophes. So how do we start looking at parametrics in that sense?
Yeah. So back to the answer I gave you just before this. If we're reducing the size of the loss quantum for the market, then all of a sudden that big number for catastrophe loss comes down. So I was speaking to a hotel on an island that was interested in Parametric, and they started the presentation by telling us that they had a claim last year. The hotel still isn't open. So when I explained that they would have had our payment with this structure, it was just like, wow, wow, wow. You can imagine the BI loss from last year, the hotel being closed to now, would have been severely reduced. We've got some really good stories of other businesses that actually were able to recover their business a lot quicker than everyone else in the area. They saw it as a competitive advantage. They ended up having their stock price increase by over 50%. It was and they don't want us to reveal their name because they use it as a competitive advantage. So there's that side of things in terms of like you can bounce back a lot quicker, and then the other side is being able to calculate and insure those uninsurable risks in a different way. So it's when you're in an area that floods all the time, or you're an area that is hit by hurricanes all the time, like Florida, the second time around when you've built back better, those buildings have then been built to a different standard. So they're able to withstand winds that are, Cat 4 and above now, instead of the Cat 3 or the Cat 2 that might have affected the buildings before. So what that means is, unfortunately, in this instance, the traditional market would probably walk away from that risk or apply a very heavy deductible. With Parametric, what you can do is say, actually, I want my coverage to start at a category 4 wind instead of a category 2 or category 3. And then that creates an insurable risk. Or in the flood example, it could be my property floods every year to 50 centimeters, but we don't need any cover for that because we're used to dealing with that. But if it ever got to 100 centimeters, that would be devastating to us. So then you then have a trigger at that point, which gives them protection.
Yeah, superb. And I think it's time probably to repeat some of the misconception, because you've highlighted this example from this hotel in Ireland. And the key thing is, by really understanding how parametrics works, they could have been back in business. They could have, high share price, because it sounds like it's a business which is quoted either on your FTSE or other different, stock exchange indices. I'm listening. And so, so it's a big hotel, hotel branch, let's say. So what are the misconceptions? I would like us to repeat them, actually, Ola, so that people can really understand the value of parametrics, because we always talk about the fact that insurance is boring, and then parametric is starting making insurance more sexy.
I agree. On that point of more sexy, we can talk about another brand that loves Parametric, which is Louis Vuitton. and they were also on the same island and had a rapid payout. So they're big advocates for Parametric, and I think there's even a video on
On
YouTube.
adore Louis Vuitton.
I can't wait till we get them on the podcast. But they're quite keen on Parametric, which is good. And then I was thinking about how to like talk about the misconceptions, you know, in more of the abstract. But I'll start with indemnity. There's basis risk, and the basis risk is, you know, deductibles, sublimits, average clauses, other clauses that you might not understand in the policy, and the fact that any non-physical business interruption is not normally insured. So the misconception with Parametric is that what if your trigger is missed sometimes, which is not a well, the misconception is that's a reason not to buy it. But basically, if your trigger is missed, then you probably have structured your policy incorrectly. So I've got a very abstract example. I'm not sure if I should use it, but let's give it a go.
Let's give it a go. Yes.
So my friend was just had a baby, and he was reading the story of the big bad wolf and the three piglets. And then I was thinking I could maybe use this story, and the piglets are the client, no offense, guys, and the big bad wolf is the big bad storm. So the first house that gets built is built out of straw, and let's say a storm of 10 miles per hour can blow that house down. So that's what happens. Indemnity builds the house back in the position it was before and just keeps doing the same thing. So this house just keeps blowing down again and again and again. That's kind of what indemnity do. So then it would stop insuring it. What Parametric will do is give you the payout and then allow you to build back in whichever way that you want. So back to the story. So in step by step, what happens with the piglets is they build the straw house, then they build the wooden house, and then they build the stone house, and then that could withstand the wind. So in this example, let's say we're in the wooden house and it can withstand 60 miles per hour winds. So if you were constructing a parametric policy and you had the policy trigger at 70 miles per hour, then that's a badly structured policy, because if the winds hit 60 miles per hour, your house is gone and you have no cover. So it's all about how you structure the policy to make sure that there is no miss factor in those risks, and then the client will have the coverage that they need. And then I'd go further to say, with a flood example, that's a little bit easier to understand. So let's say your building is 60 centimeters above ground level on the outside. So before you have any real significant damage, the flood needs to be 60 centimeters higher before you can even get into your building. That's the threshold. So that's where you probably need your main cover. It will probably have to start there. But let's be very conservative and say, you know, at 30 centimeters, there's a bit of denial of access. So you want a little bit of cover there as well. So that's fine. So then inside the building, if all of your stock is on the ground and it can be damaged immediately, then you need your payout to kick in at 60 centimeters. But if you move all your stock up by 40 centimeters, then 40 plus 60 at 100 centimeters, that's where you need your coverage to kick in. So you don't need your coverage to kick in at 99 centimeters. You don't need it to kick in at 95. You need to kick in at... So with a lot of these risks are accurately measurable, and you can build in a buffer. So the buffer could be, I want some coverage just before because I'm going to be disrupted. So if you build the coverage right, then you're always in a position where, you know, there is no real miss factor. And this is truly ground up cover that, again, protects and allows the business to bounce back.
But the key is probably based on experience. It's really understanding where and when a business needs this type of insurance, because traditional insurance is about covering a lot, right? When you think about it, it's probably about putting you whole, but it's about looking at the full extent of the risk, rather than what you are saying is there's a point in time where your business is not recoverable potentially, or need a boost to actually be able to drive and achieve the financial goal for the year, right? Because we have business interruption insurance. But what you are saying is that by really understanding the triggers as to when a business will actually need support to actually achieve its financial goal, to serve its customer, then that's when you want to trigger, because before that you can have your people, you can have a lot of other support, let's say, to actually help you recover, but it's less significant, right? It's like, imagine there was a flood and then I had, water rising, which has happened in my house. Then what happened is you take all the furniture and you have all those big wind stuff coming through to actually take the humidity out of your house, and you don't sleep at the ground floor, you sleep on the higher floor, and then off you go. But then when you have those major risks where, your house could just be gone altogether, that's where you need actually that support, I guess.
The way you described that was beautiful, because that is how a good customer would construct their policy. However, you can still buy the coverage at those lower levels, but it's up to you as a business, because we don't tell you that you have to remove your furniture and open the doors. You could just say, we don't want to do that, and we want all our coverage at that level. It's just going to cost more. So there's a client I was speaking to the other day, and they've got a disaster recovery plan, which says if the flood gets to this height, then we're going to evacuate the site. If it gets to this height, then we're going to turn off all of our machinery that we've got on site. So at these points, they don't expect any insurance. So they were flabbergasted when I said to them, we can actually have coverage at all of those points, because they didn't think it was insurable. So then on the topic of basis risk, it's almost like we're reversing out what they think is insurable. So you can almost reverse basis risk with parametric sometimes, which is why this misconception sometimes can be quite bad.
Yeah, but it means it applies to any industry, right? We talked about, cyber, and we talked about cloud, we talked about supply chain, we talked about climate, we talk about your client in restaurant industry. You mentioned Louis Vuitton. So what industry can get the most benefit of parametric insurance? And you already gave us some example, but it might be helpful for our listeners who are across industry to really understand where that applies to.
Yeah, I'll start by saying any property or any business that is in an area of the world that's affected by NatCat. I'm glad we spoke about the Uber example, because that shows you how like abstract it can be. But it works for any industry. But the ones where we've seen some real early success, or they've grappled onto it quicker than others. I'm not sure why, but hospitality, that's one where a lot of the time their business can be disrupted by natural catastrophe incidents that don't actually cause any damage to their buildings. So you could imagine an airport on Hawaii that's been damaged, or the wildfire that affected one part of the island but didn't affect all the buildings for the hotels and the hospitality element. They will be affected despite not having any damage. So that's a perfect example. Anything to do with ports that could be affected by weather events or earthquakes. We've seen a lot of success with airports as well. So planes can't actually take off and land at certain wind speeds, and they've got the best weather data, some of the best weather data in the world at airports. So you can create products that say, if I can't take off because the wind speeds is X, then we need a payout. So there's so many I almost could just keep going on and on, but I feel it's better you test us and we will let you know about them.
Yeah, it's about testing and asking the question. So, any listener on this podcast, make sure to reach out to Ola to actually understand whether your area of expertise or the business you're in could actually benefit from parametric insurance. But actually, I'm smiling, Ola, because I'm thinking about the news 2 days ago, airport, where you had a little bit of a revolution, let's say. No plane could actually depart. And so this type of risk cannot be insured because human intervention. And it was interesting because the news anchor was saying, yeah, those type of risks cannot be insured because it is about people deciding to take over airports. And so the people with planes going on holiday could not depart, and actually the insurance could not be triggered, right? Those are the type of things we just need to be mindful of.
There's another airport incident that happened that we could have covered in Dubai. So that was the excess rainfall. I think they had 75-year peak rainfall that caused flooding across Dubai, and it meant that planes couldn't fly in and out. So that would have been quite an easy policy for us to do. not sure if we're in discussions with them already.
Well, I know I have Emirati listening to this podcast, just looking at my numbers. And so I bet you get some people giving you a little bit of a call, or actually calling the airport authority saying you may need to talk to Ola at Descartes to actually deal with this little problem which happened just a few weeks ago. But the reason Parametric is getting really, really good right now, right, Ola, is because of technology and data. So let's go into the technology angle, because the key thing about Parameter is about having the data and having the right technology to measure that data and actually allow for the payout to occur without having a claims department. So taking that cost out. So tell us a little bit more around the advantages of using data and technology to build amazing parametric offers.
Yeah, sure. And I just wanted to start with this one because if we think about how long indemnity insurance has been going for the 300 plus years, and it hasn't really changed. And I'm a fan of indemnity, but it just needs a bit of help because you can imagine if we were using iPhones from 300 years ago, they don't actually exist. So the technology that we've got, the world has changed, the losses has changed. There's a lot more intangible losses now and the premise of most indemnity contracts is physical loss. So that won't make sense for a lot of businesses. So having this sort of blended hybrid parametric that can do both is quite helpful. And in the way they're using technology, so just thinking about satellite technology, navigation today is impossible without satellite and GPS. And we know that, and we trust our GPS to take us everywhere on the ground. But
Too much
then
sometimes, Ola, though, and I can still read a normal map, and I'll still have a normal map in my car. Because imagine the French countryside, sometimes you don't have Wi-Fi, and
yeah,
you do need to read the old-fashioned way.
yeah, exactly. But the good thing about satellite technology and GPS, it makes it a bit more less alien that we're using satellite technology. So one thing that struck me is back to Hawaii again, is that the first company to know about the extent of the wildfires were satellite companies, and they could see the burn area from space quicker than everybody else. So you can take pictures of space of things like the Colosseum in unbelievable accuracy and quality. So what you can do with the data and sensors that we have these days, the sensors that can measure soil moisture, the hail sensors that they've got in the US that can tell you where a hailstorm hits. I can't name the client, but we've got there's a client that didn't end up taking up cover of us, and our policy shows that the hail map would have given them an exact payout. You could see exactly where it went over the asset. The level of detail is quite remarkable, and I think that's what's enabling these products to come out of that data. So it's all based off of the fact that we can do that. And then the next level after that is the reason why we're able to model the risk is the climate data available for climate scientists and data scientists to be able to predict and sort of forecast potential events, and then do, instead of just looking at the history, because the way the climate is going, it's a lot more unpredictable. So can you base your forward-looking perspective on the past, or do you now have to forecast and look forward? And that's become a lot more available now due to technology.
Yeah, technology, I love it, as you know. And we mentioned generative AI earlier. And when we start looking at the two aspects of technology, one part is enabling what we are doing now, the data, the Internet of Things, then the Internet of Things using artificial intelligence to give the data and enable the models to actually identify, potential risk, but also respond quickly to risk which are occurring. You mentioned satellite data. We love ISI among others, right? Which are providing to us all that data in the sky to actually make those decisions. But we also need to understand the other side. And I'm looking forward at some point to talk about how do we protect ourselves from technology risk, potentially using parametrics, because we don't know when the machine is going to go mad on us. So I would love for Tanguy maybe to see whether it can design a product around, machine going wild on human. God knows whether parameters can apply there.
Yeah, I'm not sure I have breaking news for you on this one yet, but I think we'll talk about it earlier, but the energy of Tanguy and his fuel to solve problems, I'm pretty sure at some point, if that becomes an issue, it's something we'll work on. And it's half the reason why I joined Descartes as well. It's because it's got a team of 170 plus PhD level climate and data scientists that are just focusing on this problem. It's dedicated to parametric and climate and data. And then you couple that with the research and development team within that's always constantly looking at new ideas. So if I find something new, I'll be sending it to Kevin and Vanya and sort of saying, what do you think of this? What do you think of I think they might think I want to join their team. But yeah, I think that's part of the fun of it is what's next. And every time I speak to another broker that might not have heard about Parametric or even the conversation we're having now, I love that we'll end up speaking about what about this? Could you use it for this? There'll be sometimes we'll say not yet. There'll be sometimes we'll be saying yes. So I think like off the back of this call, we've got some potential follow-ups to make. So that is pretty much half the fun.
Exactly, right. And the key thing is, I'm very lucky and I want to give all my gratitude to all the amazing listeners of this podcast. We have a 50,000 downloads a month at the moment. And I want also to thank Tanguy to actually join me earlier this year. It's a project of love. And my podcast was not the greatest, I'm sure, in year one, but today, all my listeners, and I want to thank all the amazing listeners who are actually writing amazing reviews on Apple Podcasts. And so, Ola, don't forget to write yours as well. For their kind words, because it's a project of love. It's a lot of dedication, a lot of time. It's about changing microphone and all the things. It's about learning. And so today, with 15,000 downloads a month, it makes me a top 50 podcast in the United Kingdom, a top 200 in the United States. And I can't wait to conquer all the other parts of the world by making insurance a bit more fun, but also fintech, technology, and how it's changing our world. Very relevant for the listeners of this podcast. But I want to go back to you, Ola. Why Descartes? What got you to join, Tanguy at Descartes? And tell us a bit more about your new role.
For sure, because I believe that the market is ripe for this wave of parametric. So I took the bet, I'd say 5 years ago, when I left to try and lead flash distribution for parametric, and then it got to a point where I love flash to bits, so I'll add that in there still, even though I left. But it got to a point where we're doing speaking engagements and talking about all the different parametric opportunities, just like this. So we're sitting down talking about all the different opportunities. Can you use it for this? Can you use it for that? And the one place that when I looked outwardly into the parametric landscape that was doing something that could help with the majority of those issues was Descartes. Because if you go to an incumbent, then you're faced with a lot of hoops to jump through sometimes, and also the fact that it's not their dedicated thing. It's a part of, so the resource that you have will be the same resource that they use for indemnity. So you're sort of like in a queue waiting to get this done or that done. And then all the teams compared to the size of Descartes are probably dwarfed because you've got 200 plus people there and growing. So I thought if I want to be in the best place to make the parametric market work, and I'm also a believer that if any player in the market that is boosting parametric helps everyone within that market. So I think everyone will benefit from us spreading the message. I know that from my conversation with Dan Gotte's insurance manager yesterday in Nigeria, they will be watching this podcast, so that we've definitely opened up Nigeria, so that's good. But it's just that's kind of what inspired me. So I remember sitting down in the Department of International Trade conference, and it's probably what pushed me over the edge. And there were a lot of people from different parts of the world putting their hand up and asking, when will you be available in Africa? When will you be able to help us in New Zealand? And I couldn't help them there. I always had to say not yet. But now, if people ask me those questions, I can say, yes, we can help you, and this is what we'll do now. And if they've got wacky ideas, not saying your ideas are wacky, Sabine, but if they do, then we can also say we can't do it now, but potentially we could work on this for the future. And then you even got me on my own and in my Uber drive on the way home yesterday thinking, oh, could Uber use this? And I ended up sending them a message this morning. So it's I think that's part of it. And then my role is one where I think I've kind of described it. Is we make the market. I was spotted at doing what I'm doing at Flood Flash and the talks, and I guess I was lucky enough to be invited to join the Descartes mission and do the same thing there with more capability, with a $75 million capacity, up to 200 million for worldwide nat cat risk everywhere in the world. And even the ambition to do non-nat cat risk as well, like cyber. We launched our first cyber product in February. So I feel like I'm in the right place to make this market.
Yeah, that's cool. I mean, you actually email Uber for business opportunity. I did email Uber this morning about me complaining on my business account. Very different matter, but it's okay. You know, I spend a lot on Uber because I travel a lot, and so hopefully they are going to start listening. But I would love for you to tell us a little bit of a summary. You know, when we look at all those amazing businesses which are there, and the brokers who are trying to serve their customer, what are the main advice, takeaways that you would love for people to remember from our discussion today?
Didn't even know you're going to ask me this question, but I think I would say this. I think that it shouldn't be underestimated how important it is to work with the market on this. So there is no parametric expert. It's about working with people that are doing parametric to come up with solutions together with your clients. And also it would be nice to be less reactive. So as a market in the past, we've been quite reactive to when somebody has no cover. But given what's happening lately and the conversations I've been having with, even the conversation I was having yesterday with Dan Gotte, who was the insurance manager for the richest man in Africa. And they want to buy a parametric. And they've only heard that conversation from me, and it could have proactively been done from their broker. Pretty sure it's still going to go back there anyway. But I feel like being less reactive and more proactive, and it's not about parametric versus indemnity and why is one better than the other. But if you can create hybrid policies that have both in it, then clients get the best of both worlds.
Yeah. Well, as you are talking about Africa, I'm thinking about some of my great friends, very renowned people in Nigeria, having built some of the most respectful entertainment and media businesses as well. Started in United Kingdom, actually working with Monsieur Richard Branson, and then decided to go home. And so this is the type of things I'm sure they will be listening to, as they definitely listen to my podcast, and then probably give you a little bit of a call. But I'm thinking, Ola, maybe we should go and plan to go and see Tanguy in Paris and organize this LVMH, Louis Vuitton, a little bit of three, triangular conversation. So I'm going to reach out to Tanguy and see whether we can get this organized. What do you think?
That is a great idea.
So
that's the best way to end. Louis Vuitton.
Absolutely. Let's go to Louis Vuitton Institute, get them to talk to us about their experience with Parametric. So Ola, thank you so much for joining me on Scouting for Growth today.
Thank you for having me. It's been amazing.
I hope you enjoyed this episode of Scouting for Growth. Please subscribe, share with friends, and leave a 5-star rating. Your rating is so valuable. I review all of them, and my team help me adapt content to meet your needs. Also, connect with me on my preferred channels. I am a B2B growth expert, so you will find me on LinkedIn, Instagram, and Threads, and X as well as Blue Sky. All information available below. Until next, keep scouting for growth.